This is Egypt, one of the oldest histories in the world, dating back to the time it was ruled by pharaohs. Most of Egypt is in northeast Africa, but a small part stretches into the Middle East, with the Mediterranean Sea to the north and the Red Sea to the east. Interestingly, about 95% of Egypt's 104 million people live along the Nile River, which is where all the farmable land is. Most of the country is made up of the vast Sahara Desert, which is sparsely populated. About 43% of Egyptians live in cities, mainly in the crowded areas of Cairo, Alexandria, and other cities in the Nile Delta. Egypt's location is uniquely strategic, bridging Africa, the Middle East, Asia, and Europe. This has historically made it a key player in facilitating trade, cultural exchanges, and military operations between the East and the West. A significant part of its strategic importance comes from its control over the Suez Canal. This canal, which was completed in 1869, links the Mediterranean Sea with the Red Sea, making it possible to travel by sea from Europe to Asia without going around Africa. The Suez Canal is one of the world's busiest waterways, handling about 12% of global trade. Controlling the canal gives Egypt not only economic benefits, but also substantial geopolitical influence. Egypt's economy is one of Africa's heavyweights, ranking as the continent's second largest by GDP after South Africa. With nearly 100 million people, it possesses a substantial human capital base. Notably, 60% of the population is under 30, which means a huge number of young people are about to enter the job market. Since the 1990s, Egypt's economy has been growing at an average rate of 4.3% each year, which is higher than the African average of 3.8% and on par with the Middle East and North Africa. GDP per capita has also increased over the last 3 decades. However, the rapid population growth, which has doubled since 1985, means that per capita growth has been slower, at about 2.3% annually since the 1990s. Egypt's economy used to be heavily centralized, with the government controlling all production. Since the 2000s, however, reforms in fiscal and monetary policies, taxes, privatization, and business laws have shifted the country towards a more market-oriented economy, attracting more foreign investment. By the 21st century, manufacturing had become a major part of Egypt's economy, making up about a quarter of its GDP. Today, Egypt is Africa's leading manufacturer in terms of added value, having increased its share of the continent's manufacturing value added from 7% in the 1970s to 22% between 2012 and 2022. The country primarily focuses on low to medium technology industries, which make up about half of its manufacturing output. However, its exports are mainly oil and mineral products. Egypt's dependence on refined petroleum products has grown significantly, with this sector now representing 39% of the total manufacturing value added, a significant increase from about 5% in the 1980s. Egypt is also a major player in the oil and gas sector, is the 5th largest producer of crude oil in Africa, and has the highest refinery capacity on the continent, as well as being the 3rd largest producer of natural gas. Overall, the oil and gas sector, including extraction, accounts for 15% of Egypt's GDP. Since the 1980s, Egypt has been working on modernizing its systems through different changes. However, these changes haven't yet made Egypt more innovative locally or altered how it connects with the rest of the world. Nowadays, Egypt is focusing on making its economy more digital. This shift to digital has encouraged new and creative businesses to emerge in Egypt. Although Africa remains a small global player by global standards, startups are gaining ground on the continent. Egypt has a lot of potential for innovation that hasn't been tapped into yet. To unlock this potential, it needs more investment and better incentives, as well as updates to its industrial and digital infrastructure. However, Egypt's role in the growing startup scene in Africa has been increasing. From 2013 to 2015, venture capital investments in Egypt made up about 1% of Africa's total. But from 2018 to 2022, it surged to 10.5%. Additionally, Egypt ranked 2nd in the number of venture capital deals happening in Africa.
We will do that together. We will fight terrorism and other things, and we're going to be friends for a long, long period of time.
بلاش إن إحنا نصل لمرحلة إنك أنت تمس نقطة مية من مصر.
are startling new revelations from those leaked intelligence documents. It shows Egyptian President el-Sisi secretly planning to supply rockets to Russia.
Egypt is recognized as a regional power in North Africa, the Middle East, and the Muslim world, and it holds significant position globally as a middle power. Today, Egypt has more energy than it can use. Large gas fields in the Mediterranean are fueling 3 new gas-fired power plants that together generate 14.4 gigawatts of electricity. The country is also rapidly expanding its investments in solar energy. Additionally, the government has invested billions in building new roads and bridges, which have eased the notorious traffic problems. A new industrial zone along the Suez Canal has attracted investments from countries like China, Russia, and the United Arab Emirates. Moreover, while still behind global standards, broadband speeds in Egypt have increased 6-fold since 2018. All of this has laid the groundwork for growth. Yet, there are reasons to be skeptical. The Egyptian pound has lost half its value over the past year, making it the worst performing currency in the world in 2023. Nearly half of the government's revenue is used just to pay off debts, which amount to 90% of GDP. Officially, inflation is at 33%, with food prices rising even more sharply. However, these official figures might not fully reflect the severity of Egypt's economic downturn, suggesting that the situation could be even worse. This has brought misery to the Egyptian people. Around a third of them live on less than $2 a day. Another third are on the brink of joining them. Egypt's economic crisis has been a long time in the making and is partly caused by forces beyond the state's control. Russia's invasion of Ukraine has hurt Egypt badly, as it is the world's largest importer of wheat, primarily sourcing from Russia and Ukraine. The rise in wheat prices has made it very costly for the government to continue providing the heavily subsidized bread that Egyptians rely on. Additionally, the war in Gaza is making things even worse, threatening main sources of foreign currency, tourism, and Suez Canal receipts.
If you visit Egypt as a tourist, you follow a beaten track, the same route visitors have been following for centuries.
Tourism is super important for Egypt. It gives employment, foreign exchange earnings, and opportunities for economic growth and diversification. But despite its potential as a top tourist spot, Egypt's tourism earnings have stayed relatively low, averaging about $8 to $9 billion each year from 2014 to 2023. Yet, the travel and tourism industry is a big source of jobs, employing nearly 2.4 million people in 2023. Egypt welcomed the most international tourists in Africa, with many coming from Europe and nearby Arab countries. However, when compared to the UAE, Egypt's tourism income falls short. The UAE consistently earns about $30 billion annually from tourism during the same period. The Suez Canal, the shortest sea route between Asia and Europe, is an important source of foreign currency for Egypt and netted some $10.25 billion in 2023. However, its earnings took a hit, dropping by 40 to 50% after attacks on Red Sea ships by Yemeni militants in response to the Gaza conflict, leading major shipping companies to avoid this area. This, in turn, strained Egypt's foreign reserves, which has been declining since 2020. But in 2024, there was a significant turnaround. Thanks to a landmark investment deal with the United Arab Emirates, UAE, Egypt saw its foreign reserves surge to their highest level in about 2 years. The UAE sealed a $35 billion deal with Egypt, marking the largest inward investment in the country's history. Egypt's economic growth has been inconsistent, showing a pattern of ups and downs over the past 4 decades. At the same time, the country's population has been steadily growing and has even accelerated in recent years. This combination of volatile economic growth and increasing population has put a strain on the Egyptian economy, leading to mismanagement and irrationality. The country's main underlying problem is the stranglehold on the economy exercised by the state, and specifically the army. The army's influence has expanded under the rule of President Abdel Fattah al-Sisi, formal commander-in-chief of the armed forces. It now controls various sectors, from petrol stations to fish farming, mineral water, olives, and even car manufacturing. This dominance stifles competition and deters private investment, as few companies can compete with an entity that doesn't pay taxes or customs fees, For ordinary Egyptians, this means slower economic growth, higher prices, and fewer opportunities. It all started when Egypt suffered periodic economic crises since the Arab Spring uprising of 2011, a series of anti-government protests, uprisings, and armed rebellions that spread across much of the Arab world. The government has struggled to cover huge bills for wheat imports, subsidies, and public sector salaries.
The head of the Egyptian military announced an ultimatum against Morsi. He said the army would impose their own roadmap for the future if the president did not address the
President Sisi, who came to power in 2013 after the military under his leadership ousted Islamic President Mohamed Morsi, tried to kickstart the economy by launching vast public works projects, including widening the Suez Canal and building a new administrative capital in the desert. Returns on those investments have been patchy, and many of them were funded through borrowing. By late 2023, almost half of state revenue was being spent on debt interest. That was only sustainable because of high interest rates and a managed currency that propped up foreign demand for local debt. However, when global interest rates rose due to the pandemic and Russia's invasion of Ukraine, investors withdrew around $20 billion from Egypt. This triggered a crisis that many had anticipated for a long time. Domestic industries in Egypt are also facing challenges due to lack of investment, and private companies are frustrated by what they see as unfair competition from military-linked entities. This situation restricts foreign direct investment, FDI, in sectors beyond oil and gas. Today, foreign direct investment, FDI, inflows have been relatively modest, amounting to $11 billion in 2022. This figure pales in comparison to that of other middle-income countries that have attracted significantly higher FDI inflows for the same year, such as India, $50 billion, Brazil, $70 billion, or South Africa, $90 billion. Despite economic hurdles, Egypt has achieved its lowest unemployment rate ever recorded. The national infrastructure projects have played a key role in creating jobs in various sectors, leading to the incorporation of many informal workers after being officially registered. These projects have also improved the economic growth and competitiveness of Egypt and attracted more investments to different sectors, although still low compared to the oil and gas industry. Egypt has huge potential to overcome such notable economic hurdles. But why is it failing? Many mainstream economists attribute the crisis to macroeconomic mismanagement, acknowledging the importance of macroeconomic stability for growth. However, this explanation does not capture the full complexity of the issue. Instead, Egypt's sluggish and relatively modest economic transformation can be better understood through the lens of the political economy of ideas. The concept of ideology, or the influence of ideas, is a fundamental tenet in political economy, offering insights into why some nations progress more rapidly than others. Unlike some other countries, Egypt has not fully embraced a long-term, target-driven, pro-market ideology. Instead, its economy still relies on patchwork economic reforms, which are often slowed down by remnants of the Nasser era. This mixed approach leads to slow and inconsistent implementation, creating uncertainty for both local and global investors. While investors may handle political instability, uncertainty in economic policy makes firms hesitant to hire, invest, or expand into markets. To tackle the core challenges facing Egypt's economy, it's crucial to examine and address the political and economic prerequisites, not just focus on basic economic principles. Without cultivating a stronger pro-market mindset within the government and among the public, Egypt's economic reforms will likely remain stuck in a cycle of stagnation for years to come. Many assume that Egypt is too big to fail, and that donors or Gulf states will step in to rescue Cairo whenever needed. However, the truth is, with around 60 million people living below or just above the poverty line and facing worsening conditions, the government is already failing its citizens. If Cairo's allies genuinely want to assist the country, they need to urge the government to fulfill its promises and take action to address the situation.